All right, before we get started, just the usual heads up. This is all for educational purposes. It is absolutely not financial advice. Please always do your own research.
Okay, let's jump right in. Today, we are looking at PLAZM Day 123, and we're calling this one the conviction test. And for good reason. It's one of those days where the market is throwing a bit of a fit, but the protocol's fundamentals, well, they're telling a completely different story.
And this slide right here captures that conflict perfectly. On the left, you've got the noise, the day-to-day price swings, with PLAZM and eShare both down. But on the right, you've got the signal, the stuff that actually matters. Staking is up 40,000, burns are up 40,000. See the difference?
So this really begs the question, right? What's the real story here? Is it the temporary price dip that's just following the rest of the market down? Or is it the fundamental strength that's quietly being built underneath it all? Let's dig in and find out.
First things first, you have to acknowledge the noise. Let's not pretend the red numbers aren't there. The whole crypto market, really led by a pretty significant pullback in ETH, is feeling the heat today. So this isn't some PLAZM-specific issue, it's a market-wide thing. And here are the numbers that are making all that noise. PLAZM is down about 1.6%. eShare down over 4%. You know how it is. When the big market tide goes out, most boats get a little lower in the water. That's the noise. Now, let's go find the signal.
Okay, so let's cut through that static. Our first piece of real solid signal is the burn machine. If you're new here, burning just means tokens are permanently zapped out of existence. It's a deflationary engine for the protocol, and man, is it humming right now.
And would you look at that number? The protocol didn't just cross the 1 million token burn milestone, it's already 50,000 tokens past it. Every single one of those is gone forever, making the remaining supply that much more scarce.
And here's the kicker. A full 40,000 of those tokens were burned in just the last 2 days. This burn mechanism is automatic. It doesn't get scared, it doesn't have emotions, it doesn't panic. It just does its job, day in and day out, no matter what the price is doing.
And this right here, this is the main event. This is the most powerful signal from day 123. The market pullback was a test, and what was the community's response? An incredible show of conviction.
Just look at that number. During a time of market fear, when prices are down, an extra 40,000 PLAZM tokens were staked. They were locked up by holders who want to earn yield. This isn't selling. This is the polar opposite. This is accumulation. And this quote just says it all. You know, when fear is high, some people sell, but the long-term believers, they see pullbacks like this as an opportunity. They're using the market's short-term weakness to build an even stronger long-term position.
And that powerful move pushes the total stake supply to over 2.4 million PLAZM. Think about that. That's a massive 36% of the entire supply that's now locked up by people who are clearly in this for the long haul.
And you see this kind of conviction, because it's not just one or two things going right. The whole protocol, the entire engine, is just doing its thing, completely unbothered by the market's mood swings.
I mean, let's just walk through this because it's really impressive. The bond accumulation is just relentless, up another 68, and we're knocking on the door of 8,000 total. And the result of that? The yield engine just keeps spitting out cash. Over $1,500 in new profits were claimed in just the last couple of days. The machine just works.
So, what does this all do for the supply structure? Well, this chart says it all. When you add up the staked supply, the liquidity pools, and the burned tokens, you get 73% of the supply being protected. It's locked up, it's burned, it's working. And that structure has been incredibly resilient.
Okay, so that's the health of the protocol right now. But let's look down the road a bit, because the on-chain data is actually showing us a pretty awesome picture for the near future. We're talking 80 days of clear skies. And this timeline shows you exactly why. Just look at the release pressure from vesting tokens over the next week. It steadily drops off until you hit day 129, what we call an ultra-light day. Only about 24,000 tokens are coming into the market. That's one of the lightest days we've had in a long, long time.
So here's the bottom line. We have a confirmed 80-day window with no big supply shocks on the horizon. And why does that matter? Well, it gives all those positive fundamentals, the burns, the staking, a stable runway to really have an impact without being pushed back by a flood of new sell pressure.
And all of this brings us to the final verdict, the real takeaway from day 123. It's that classic story of two things competing for your attention, the short-term price versus the long-term value being built. And that's really the question I want to leave you with. How do you measure today? Do you measure it by the temporary red number on your screen that's just following the crowd? Or do you measure it by the tangible, real-world improvements to the protocol's core health?
Let's just run through the checklist one last time. Burns, up. Staking, way up. Bonds, up. Yield, growing. The supply structure, stable and protected. The future supply schedule, looking super light. Every single metric that actually matters for long-term value got better today.
40,000 tokens were staked during a pullback. 40,000 tokens were burned. 68 bonds were added. Over $1,500 in new yield was created. While the market is testing everyone's conviction, the believers are responding with accumulation. Today's price is temporary. The shares being accumulated are permanent. And that is the difference between trading and building.
And we'll wrap up with our full risk disclosure. Remember, this content is for educational purposes only and it's not financial advice. Crypto investments come with high market risk, so please be cautious and always do your own thorough research before making any moves. Thanks for tuning in.